Hello everyone and welcome back to Operation Tradefront. My name is Dustin Buchanan, and today's video we are going to touch on something very interesting. 3 steps to become a profitable trader on Robinhood. Now you can go and trade whatever you want, whenever you want, with no guidance, with no tracking, with no nothing, and you may or may not be successful. But in this video we're going to talk about the 3 things that you need to do if you want to be successful and a profitable trader on Robinhood. And step number 1, find stocks to trade. Now, in finding stocks to trade, I use a platform called TradingView. So let's go on over there now. All right, now that we're over here on TradingView, there's a couple of things that you'll see. I have a lot of stuff on here, and I have my current plays listed over here. I got a bunch of different stocks that I'm playing over here, and this is just something that you can do on your own with whatever stocks you prefer to do and whatever indicators you prefer to use. Let me hide these, actually it'll make it a little bit easier. So as you go through and you track a trade, I can track the SPY back for a long time where I've traded various things and tracked various things on the SPY. I've not played it a lot here lately because things have been so volatile. But nevertheless, you have a list of stocks that you want to track and watch. And then you look for specific things within those stocks to make your trades. So step 1, put some items on a sheet that you can follow and track those stocks until you see a catalyst or some sort of motion in the stock that makes you say, okay, I want to trade this stock, or I understand this stock enough in order to trade it. Moving on to step 2, which is have a trading plan. Your trading plan is going to consist of things such as your entry and your exit price. So I'm going to give an example here. Let's say that I wanted to play a put credit spread on the SPY. I look down and I see that there's a support right through here. So I could draw a line right through here and say, okay, it looks like if it was to come to there, it should bounce. And then if I wanted to play a play, I'd be looking at something 380 and below, because the actual support is at like 381 and 3 cents. So 380 and below would give me a little bit of cushion. If you wanted to push it, you could do the 381, and then you say, okay, I'll put this play in. I'm gonna expire on the 22nd, which is Friday, or tomorrow in this case. So you pick your stock, you pick the play that you're going to make, you pick your entry, you pick your exit, and you pick your date, your deadline, in the case of playing options anyways, for this example in the video. So now that you found a stock to trade and you have a trading plan in place, step 3 or 2A, follow your trading plan. If you don't follow your trading plan, you will not be profitable. And this can go both ways. If the stock goes way up above the profit level that you put in, say you're not playing a credit spread and you're playing an open option call or put, and you say, I want 20% profit, and you let it ride, and you're like, oh man, I got 20%, but it's right there, you know, come on, give me 25, and you get greedy, you could easily lose 20, 30, 40, 50, 60% in just one move of the stock. So make sure you stick to your trading plan, and that also goes for exiting the play if the play goes against you. Step 3, document your trades. Now this is a cumbersome part of trading, but you have to do it. If you do not measure what you're doing, you will not know whether you're being successful or not. You can look at your Robinhood account all day long and say, okay, I'm up $100 today, I'm down $100 today, but over time you're going to lose that ability of knowing what trade's actually done well, what you're good at, what trade's done bad, and what you need to work on. All right, now we've got this Operation Tradefront credit spread tracker sheet that I've made. A lot of people asked me about this in the last video that I mentioned it, and it took a little bit of time to get it the way I wanted it, but I wanted to make sure that things were easily explained. So you've got the credit spreads tab here and the legends tab here. So in the legends tab, it just breaks down what each column is for, but you don't even have to use this tab if you don't want to. In row 2, each column is broken down for what it is. So like the date, input the date the trade was entered. The strike, sell strike, insert the strike price of the sold contract here, and et cetera, all the way down. So you pick your dollar amount, whatever your trading account is, or whatever amount of your trading account you want to allot 2 credit spreads to diversify and everything. So starting out, we'll put in the date. We're going to put in today's date. The stock ticker is going to be the SPY. The current stock price is $384.24. $384.24. We're going to do one contract. I'm going to sell, what was the thing over here? It was the 381. Okay, so I'm going to sell the 380 and I'm going to buy the 379. And now we got to find out what that premium is. So, and yes, even I have down days. This is basically all because of Fastly. Fastly gapped up like $7 today. And this is a different type of credit spreads. You'll see I've bought puts here and then I've sold puts here. It's different kind of spread than what we're talking about here. I'll capture that in another video later on. But let's see for the SPY. We're going to trade options. We're going to go to the January 22nd. We're going to go to the puts. We're going to sell a put. One thing I will say too is you need to understand how your platform works, and you need to play around with that before you start making trades to make sure that you know how everything flows and how everything works. So we're going to sell the 380. We're going to buy the 379 for a $6 credit. So the premium is going to be $6, as I mentioned before. But just so you're aware, in stock options, everything is done on the decimal amount. So, but it's for 100 shares. So it's 12 cents a share. The contract's for 100 shares, so you multiply by 100. So we've got that in. The total premium now, you can see it calculates everything across. So the total premium is $6 for what we're bringing in. The expiration date is going to be tomorrow. Our collateral amount is $100. It's the difference between the buy strike and the sell strike. So our total collateral is $100 because we had one contract. And our active balance now is $406. It took the beginning balance of $500, subtracted the $100 in collateral, and added in the premium of $6 to give us an active balance of $406. That way, if you wanted to make a couple more trades, you would know you have the active balance available to be able to do that. Now, this will update as you go through. So say we get to tomorrow, the SPY gaps up $6, the contract's worth a penny. We're going to buy it back for $1. So our total exit price is $1 because we had one contract. And then this one is the only thing that you have to put in manually, and that is because your collateral return can be different in certain circumstances. It's not likely. You're either going to lose it all or you're going to get it all back. You're going to roll your trades and stuff like that. But it can, or could or could not come back at its full 100%. So on your collateral return, when you're done with the trade, either put in 0 if you lost the trade, lost your collateral, it went against you, or put in 100, or whatever the dollar amount is if you got your money back, your collateral back. So then your profit is at $5 for the trade. So now your new balance is $505. And then there's a notes section over here that you can trade or track your trade with any notes. Say an earnings announcement that you weren't aware of came about. They issued a special dividend. They cut their guidance randomly. Something happened in the community or in the country, whatever the case is. So that way you can track each specific credit spread that you trade. By tracking these trades on these credit spreads, you can see a couple of things. One, you're going to see what ticker you're profitable at. You're going to see how far away you've been keeping your strikes when you're selling them to be profitable. And you're also going to be able to see which ones are bad and go from there. Now, hopefully you're going to have more profitable ones than not. Say you get 10 trades, 15 trades down here, and you look back and you have one red trade or one lost trade out of all 15, then you're like, okay, what did I do wrong here? And you can work on that, or you can eliminate that from your trading plan in the future, and you can fix it. But if you didn't track this, you would never know. And then some of the other trades that we do with selling premium and stuff, tracking your stock price, lowering your cost and everything, you wouldn't know that if you weren't tracking these trades. That's for another video though. But so hopefully this will come in handy for you. I know a lot of people have been asking about that. So those are the 3 ways of what you need to do to track your trades and become a profitable trader on Robinhood. I hope that you've enjoyed the video. If you did, please like, subscribe. leave me a comment. Let me know what you think of the tracker. Share the tracker with anybody that you think could benefit from it. Make sure you subscribe to the channel. Come back for more. And if you're not on Robinhood yet, please check the description below. There is a link for you to sign up to get a Robinhood account. You get a free stock. I get a free stock. And it just helps you to grow with your finances. It's a return on your investment immediately, and it also helps me to grow the channel. So thank you again, and please check back for more. Again, my name is Dustin Buchanan, and this has been Operation Tradefront.